Welcome to this webinar on the multiple time frame MACD. MACD is a very common indicator and well used in the trading environment. And when you add multiple time frame to it, it gives a great edge to your trading. So we want to cover what this indicator can do. Now the typical indicator of MACD is, of course, the MACD line is yellow, and then the cyan is nothing more than a smoothed version to give a trigger line. And then you have the zero line with the histogram above and below. Now we're not interested in this smoothed line, and we don't need the zero and the histogram. We're just using this MACD line, but we're using it on 7 different time frames. So this particular line right here is the MACD line, the white. Now if I hold my cursor down, you're going to see the little pop-up box that says that I have a MACD on the chart, which is a 5-minute, the 15-minute, the 30, the 60, the 120, and the 240, plus the daily. So that gives me the 7 different time frames. So this is the 5-minute, here's the 15, here's the 30, it's magenta, the 60 is the red, changes every hour, then this dark red is the 120-minute, and this gray is the 240-minute line, and then the yellow is the that's the daily. So you can see it adjust at the end of each day, and it goes clear across the day. So that's what the different lines are. Now, how can it be used in our trading? Well, here's a good example of where we basically see all these lines kind of come together at the end of the day, and see how the 5-minute one broke down below a lot of the other time frames that were all congested there. Anytime you get a breakout like that, that's a good indicator of a trend movement. In this case, it would have been a downtrend, just like over here when it broke out below these lines and started coming down. That would have been the downtrend. This happened to be right at the first of the day. Now you might think, well, there's a lot of volatility. Would that make sense to make that trade? Well, if you look at just the technicals, that here we basically had a start of a day, it went down, kind of went sideways, closed up, challenged, then closed the day again. And then the next day, basically it came to that same point. So yes, that would be a very high probability trade to enter right anywhere up in this area going to the short side. Now you can see the white line comes down. When it pulls inside the 15-minute, that's the wave of that down move is over. It doesn't mean that there's not going to be another wave, but for that one it's over, and it's a good time to take your profits. So you would have been in up here, and you would have been out right in here. Nice little trade. So let's move forward in time a little bit here and see what else we have. Here's a good area, shows a couple of trade opportunities. This first one is a long right here. You can see when the white line, you have a couple of things here. You actually have the fact that it's bounced off the daily. When it bounces off the daily, that's actually a good signal to go long right there. So as it bounced off, you could actually know and go long down in here. But then when it breaks above these other lines, that's also a good sign for a long. Now it pulls back in a little bit, but basically it works its way up and ends up being a nice trade. And after you have this big up move, then you gap up for the day, a big up move, and it starts turning over and it pulls inside these other lines. That would have been your exit point. Now we have an immediate short that comes in here when basically the white line breaks below these others, and when it broke below the dark red here is when I went short, and that was a good short sign, with the exit being when the white pulls back inside the 15-minute MACD. So we're not using some smooth line that just induces lag for a trigger. We're looking at the other time frames MACDs. So much superior way than just some lagging line for a trigger point is what it's doing with these other time frame MACDs. As we move forward in time a little bit here, we see another good opportunity where, see how these are all congested together? When that happens, it won't last, too long. That's a multiple time frame consolidation going on here. And when it broke down right here and broke below these other lines, that's your short signal. When it came back inside here, that's the end of that wave of the down move, and it's time to take your profit. Now in this case, you can see it worked its way kind of a sideways consolidation, and then it made another wave down that you see right here. So that's another opportunity to make a trade there as well. Here's a good one at the open of the day. It gapped up, but we basically have a nice entry opportunity because it broke above all the other lines. So we go to the long side, and when the white pulled back inside the 15-minute MACD, that would have been our exit point for that wave of that move. Here's a good example where it shows how our MACD eliminates the gap distortion. So this is a very big gap, and basically it jumped up like this. Now the MACD shows, the normal MACD shows that that's a very strong up move. Well, you can't do anything about the gap. Most people don't trade the gap. So therefore, all it does is distort your indicator and shows you this big upward trend, when in reality it was basically a down move, because the moment this opened, it moved down and it continued moving down across this area. So this showed a truer reading of that down move. It didn't have the gap distortion. It basically, from here, this bar to this bar, it didn't change the direction like this one made a huge shift. So it showed the down move, and you would have been out of that trade right there before that kind of sideways drifting action. Now here's another entry opportunity right here, where basically it breaks above. You can see it's kind of worked its way up, and it pulled back and bounced off of these other lines. So that's a good indicator as well. And it looks like it's ready for another wave, to the top side. So that's the long entry. And when it pulls back inside the line here, that would have been our exit. Here's another one, same example. Basically, it kind of came back and formed this flat area where they're together, and when it broke to the top side for the 5-minute line away from the others, that's the start of our up move. And after the up move ended and pulled back inside the 15, that's the end of that wave. Now it doesn't mean that the trend is over, but it's the end of that wave and an opportunity to take profits. Basically drifted sideways for the rest of the day. Now here's a good example of a bounce off of the daily and the 240-minute, where it pulled back the 5-minute MACD and hit there and turned over. That's an excellent opportunity as well. You went short, and then when it came down, it broke away from the other lines, and when it pulled back inside those lines, that's our exit point, and you're out of the trade. So I think that's the things that I had marked out, just some good examples of how to use the MACD on a multiple time frame edge for a great trading tool, where you add the multiple time frame edge, you remove the gap distortions, and take advantage of seeing the MACD across many time frames all at once. A great way to go. Thank you for joining us.